Hello everyone, good afternoon and a very warm welcome to this ICAS webinar, our VAT update. For those of you who don't know me, my name is Chris Campbell. I'm Head of Tax for Tax Practice and Owner Managed Business Taxes here at ICAS, and I have the pleasure of being your webinar host today. Our event this afternoon will last approximately 1 hour, where we will cover the latest developments in the world of VAT, the third largest source of tax revenue after income tax and national insurance. VAT affects us all in our daily lives, and it's an area where we regularly receive queries from our members through the ICAS Technical Help Desk. The last year or so has seen MTD for VAT and the new penalty regime bed in, and that's before the developments in last week's spring budget. And we just need to look at the complexities of buying a packet of Jaffa cakes or even a Walker's Poppadoms to know how important it is to get the details right. To explain and help us understand more about the key VAT developments that could impact on you and your clients, I'm delighted to be joined this afternoon by our speaker, Tony Cochrane, Associate Director at RSM. Tony has over 18 years' experience as a specialist in VAT, initially at HMRC and more recently in practice at both Big Four and mid-tier firms. A chartered tax advisor, Tony supports both private and public sector clients in Scotland and further afield, and is also a member of the ICAS Indirect Taxes Committee. Tony presented at our VAT webinar this time last year, and it's great to be hosting him once again this afternoon, and I'm really pleased to be welcoming him to our webinar today. Before we begin, just a few housekeeping matters to remind you of. At the start of the webinar, you'll have noticed our standard disclaimer. This webinar provides general commentary on the topic under discussion, and we expect our members to use their professional judgment and seek further advice as appropriate. You can submit questions at any time through the Q&A facility, which can be accessed at the top of your screen. Questions can be submitted anonymously, but we'll be saving all your questions until the end for the live Q&A session. Please also join the conversation today through the chat box accessed at the top of the screen. This allows you to comment or discuss with fellow attendees on matters covered by this webinar. We are also, of course, recording this webinar and will make it available for on-demand viewing in case you want to refer back to it or share it with others. The slides will also be available on the events page on the ICAS website after the webinar under the events listing. Everyone on the webinar is automatically muted, so there's no need to be concerned about background noise wherever you are. We look forward to receiving your questions throughout the course of the webinar, and we will try to get through as many of those at the end. We'd also be keen to hear of your experiences of liaising with HMRC in the world of work. I've prepared some poll questions for you to consider whilst Tony is speaking. Please complete these with your views and we'll look at the results later on. Tony, it's great to have you with us this afternoon, and without further ado, it's over to you.
Thanks so much, Chris. Great to join you as ever, and thanks everyone for joining this afternoon for a bit of an update on VAT. Hopefully we'll get through some interesting things today. Amongst them, we'll be talking about the updates from the spring budget this year, and we'll also be covering off some things that I'm seeing on the ground and people, be it clients and other advisors, are discussing with me when it comes to things like VAT registration, option to tax, and international business considerations. And then finally, what we'll do is I'll go a whirlwind tour around some of the case law updates that I think will be quite interesting to you or some of your clients. In no particular order, I'll be talking about poppadoms, casinos, car parks, and some more snacks just for the fun of it. So hopefully we'll cover some nice ground and a nice mix this afternoon. But straight into the spring budget 2024. Just a week ago, we saw the announcements come in, and the headline news was, of course, the increase for the VAT registration threshold from £85,000 to £90,000. That's going to kick in on the 1st of April. And we're also going to see an update for the VAT deregistration threshold. That's going to go from £83,000 up to £88,000 from the same date, the 1st of April. And we're also going to talk a little bit about some other updates that were announced, such as in relation to the VAT retail export scheme. private hire vehicles, taxis, essentially, and also carbon credits coming into the scope of the TMO, the Terminal Markets Order. But first, we're going to cover off, probably unsurprisingly, a good bit about the VAT registration threshold update. And first, just going to speak about the government's stance on all this. The government said that it's going to increase the VAT registration threshold from £85,000 to £90,000. And the purpose behind that, in the government's view, is to help small businesses with their taxes that will help them grow, and the recognition that VAT can be quite a burden for small businesses. And there is recognition that it is tough, but do you know what? In the government's eyes, we do have one of the largest thresholds around. And if you go and look at, or if you experience other countries in or around Europe, that is a fair comment from the government. The government said that they estimate 28,000 businesses will benefit from no longer being VAT registered because of this increase. And they also, as I said a moment ago, they increased the VAT deregistration threshold as well from £83,000 to £88,000 from the 1st of April. Before I move on, one additional comment I would make is many on the call will probably help their clients try to work out when they've got to be VAT registered. So if you've got a tracker in place, think about updating that with the new threshold of 90,000. And of course, if you're keeping an eye on deregistration for a client, update your tracker for the reduction, or sorry, the increase to £88,000. But moving on from the government stance in this, I just thought it'd be useful to just try and capture and chat a little bit around what I've been discussing with clients and other advisors, etc., since the announcement last week. And of course, you'll probably have seen in the press some of these comments, or even had the discussions yourself, perhaps. But there are a lot of people out there saying, you know what, thanks for the update, but it's not enough. You know, it doesn't actually counter any of the real issues that people see, be it as advisors or as businesses that are trying to grow and flourish. So the big one, I suppose, I would talk about is the cliff edge issue. And I will go into that in a little bit more detail in a moment. But that's essentially when a business is actively trying to stunt their own growth in order to remain below the VAT threshold, to stay out of the VAT club, because of the admin that goes with that, but also the thought about, well, where does the VAT come from? Do I have to increase my prices? Do I have to eat into my own profits, or a hybrid of both? How am I going to handle being VAT registered now? And a lot of people are saying that £5,000 increase just maybe isn't enough. So it's all about, you know who you talk to, but just sharing what I've seen out there. And, you know, it's one of these things whereby in some of the polls today, you can share your view or add it into the Q&A about what you feel or what you're seeing in discussions with clients. It could be the case that bolder moves would have been more beneficial all round, and I will cover off a couple of examples of that. The main things I suppose I thought of were, well, what about a massive increase to the VAT thresholds? That would have got rid of the cliff edge, essentially. Or the other side of the coin, what about with a massive decrease or a nil threshold? That would bring its own benefits, but obviously everyone's got their own opinion on what that looks like. And no doubt that factored into politicians and Treasury's mind as well. But to go into a little bit more detail on the cliff edge, which is something I talk about quite a lot with people, and you may have those chats as well, but it's just worth reminding yourself, what is that about? There's a lot of people talking about it these days, so a little bit of a case study exercise. We've got a business, Tommy's Tyres, who replace and repair damaged car tyres for members of the public. And the turnover is just below the VAT registration threshold, and are not voluntarily VAT registered. For the last 2 years, Tommy's trading at just below the VAT registration threshold, because Tommy's aware that if he goes to £85,000 of taxable turnover in any rolling 12-month period, not a financial year, not a calendar year, but any 12 months, he would have to register an account for that. And that means he's got to have that decision-making process. Can I add on the cost of that to my sales? Or do I just need to absorb the cost because I'll get Tim's Tyres half a mile away as competition and they're not VAT registered yet? So with the £90,000 threshold for Tommy, that would look like £15,000 if he was to absorb the cost himself. It's not an insignificant sum in any stretch, no matter what way you look at it. So it's very important for Tommy to be mindful of that and what it looks like for his business. And in this case study, Tommy essentially decided, you know what, I'm going to take that 3-week holiday in July and I'm going to do X, Y, and Z, but ultimately I'm trading at below the VAT registration threshold. As such, when I get my £84,000 or going forward £89,500, I don't need to worry about the VAT man or VAT registration, VAT returns, MTD, etc., etc. So, you know, Tommy's happy with his lot, so to speak, when it comes to remaining under the VAT registration threshold. So what is the impact? Well, for someone like Tommy, it's as crude as they've got an extra £5,000 a year to play with. You know, every 12-month period that they look at, it's £90,000 rather than £85,000 that will have them entering into the VAT club. So, you know, for Tommy, all things being equal, it's not a massive difference probably. Is it enough to justify significant growth plans, which is what the government intended, or even employing new staff, which again is what the government would like, and no doubt what Tommy and other business people would like? Well, the answer is maybe not. You know, a larger increase would have maybe helped people like Tommy and other small businesses and the economy, because it would have given the breathing space to grow the business more organically without having to worry about, oh, I'm getting close to the threshold. What do I do? Do I try and stunt my own growth by taking a big holiday, close the doors for a couple of weeks here and there? Or do I really go for it because I've got a larger threshold to work towards? So, you know, there's not a right or wrong answer here, but just chatting about what many businesses will be thinking about when it comes to their own position with the £5,000 increase to VAT registration threshold. It might have been better for them, for example, if it went to, you know, let's say £110,000 or £150,000. If that was the case, maybe it's more feasible to bring in support to have more staff to really have a go at growing the business, still remaining out of the VAT club, but maybe being a bit more happy about joining the VAT club once you have those additional sales and you're closer to the, or you're beyond the 6 figures for VAT registration. Ultimately, in my view anyway, it doesn't appear that there'll be any significant winners from the £5,000 increase. You know, it's essentially one of these things whereby you've got to say, well, the government think there's maybe about 28,000 people that are winning here. In the big scheme of things, is that worth it? For those individuals, of course, it might be. But broadly speaking, across all our client bases, is it a major thing that we're all thinking of? Is a massive win from the government's budget this year? I'll leave it to you to decide what you think about it. But on balance, it doesn't appear to be, you know, a big winner for a massive population of people. Moving on to my alternative view of the world, what about you drop the threshold? You know, a significant reduction in the threshold might have been a good thing, depending on, again, your view of the world. You know, if you had a nil threshold or a very insignificant threshold, I don't know, let's say 12 grand, 15 grand, what you would be looking at is many more people coming into the VAT club. Now, on the face of it, that might not be a very appealing idea for many small businesses. You know, your clients that you speak to every week, every month, whatever it looks like. But there might be some advantages to such an approach. It would give people an even playing field. So Tommy's Tyres doesn't need to worry about Tim's Tyres too much, because everyone would pretty much have to register for VAT if they're in business. VAT would no longer be that barrier to growth. You know, you'd have to go for it knowing that you're VAT registered anyway. So let's just keep our head down and keep moving forward and grow the business as best we can. And more VAT is going to go into the Treasury's till at the end of the day if practically everyone is VAT registered. And it might be trickier for the minority and amongst the population that are outright trying to evade VAT. It might be useful if practically all businesses had to be VAT registered. Now, again, it's all about your opinion and your clients' opinions of the world, but it would have taken a very confident and bold chancellor, perhaps, to have enacted such a change. As I said, we have got one of the higher thresholds around the OECD, etc. But it's okay saying, well, everyone else is in the same boat. It would have been a very, very strong message indeed if this came out of the budget last week, but certainly one that I would always keep thinking about. Will we see it someday, essentially? There were, of course, other budget VAT updates that didn't perhaps get as much attention, last week. I think the first one covered it a couple of times briefly, but the VAT deregistration threshold will increase by £5,000 to £88,000. As long as I've been doing VAT, there's always been that £2,000 difference between the VAT registration threshold and the VAT deregistration threshold. What's the meaning of this? What's the impact of this change? Well, it will be trickier for businesses that are VAT registered that don't want to be VAT registered to get out of the VAT club. You might have some clients that are tracking and saying, oh, do you know what? I'm pretty confident that in a year's time, my takings will be about £85,000. And it might not be the best conversation, because now you're going to have to say to them, well, look, the goalposts have moved a little bit, and now the threshold to deregister and cancel your VAT account is £88,000. So it's worth just keeping in mind that this might be some awkward conversations as well for some people that thought they might be able to get out of the VAT club soon. But just so long as you're aware of it, it's worth just having the conversation with your clients that are thinking about cancelling their VAT account. And of course, you can provide your view or what you're seeing with your clients on the polls today and also in the Q&A chat. Other things that were mentioned during the budget were the VAT retail export scheme, essentially where, let's call it tax-free shopping on the high street. So that means that tourists essentially buy stuff, pay the VAT, and then claim it back. So that isn't a cost to them. That was scuppered a few years ago now, it feels like. And there's been a consistent voice amongst the retail industry that supports the reintroduction of the retail export scheme. Very valuable for retail in a very direct sense, especially if you think about tourist hubs around the country like Edinburgh and beyond that, going down to London, etc. But you know what? It has that wider position where it also affects wider leisure and hospitality, where some people may decide we're not going to go to the UK on that holiday because we really want to buy that watch, for example, but I'll just go somewhere else where I'll get it tax-free, and then it might be hurting other industries. And worth pointing out, for the avoidance of doubt, there was no update in hospitality and leisure to speak of last week at the budget from a VAT perspective anyway. There remains to be a good appetite, though, for updates such as perhaps an additional reduced rate, or bringing things into the existing reduced rate, like we've seen during the, as I would call it, the COVID time, the COVID years, where we've seen the temporary reduced rate for things like hotels and restaurants. But there was no movement there, which is disappointing for that sector. The other one that was mentioned during the budget in the notes was the VAT treatment of private hire vehicles, taxis. And there's going to be a consultation on this, which will end up with clarity on the VAT position. This is being shaped by, court cases involving Uber, and it's not even necessarily court cases that are VAT related, but they have a VAT impact. So, for example, it's about whether or not you're acting as an agent or a principal when you're the Uber of the world. Because that has a massive effect. It's always been the case whereby HMRC use wider legislation and are happy, or were happy, to accept that, taxi private hire firms were acting as an agent and the driver was the principal. Most drivers, their income is going to be below the VAT threshold, so they don't need to VAT register. And the private hire company would only need to worry about let's call it the amount they charge for their radios, or more modern technologies it may be these days, but whatever they're providing to the drivers. That's maybe going to change going forward, but at least we know that HMRC and Treasury are cognizant that this is an important matter for all in the industry and, of course, passengers, because, you know, fares will go up if everyone has to account for that at 20%, essentially. And the final one from the budget last week that got some attention was just bringing trades and carbon credits within the scope of the TMO. So I don't expect there'll be many on this webinar this afternoon that this impacts on, but as always, happy to be proven wrong. So I won't speak too much about this, but if anyone does think this is relevant to them or their clients, just put your name into the hat of the chat room and we can somehow talk about it a bit more. But that was essentially the budget updates this year from a VAT perspective. Now, the next things I'm going to cover off are just a few, let's call it topical pieces or things that are always relevant. You decide. But essentially, first I'm going to talk about VAT registration, just for a change, but move on from thresholds onto options and also HMRC service levels. So when it comes to VAT registration, we've got to remember there's quite often a few choices at play. You've got no choice if your taxable turnover exceeds the threshold. That's something that means you've got to be VAT registered. But if you're below the threshold, well, should I register voluntarily? The answer is probably definitely consider it if you're in a regular repayment position, you know, if you're selling zero-rated things all the time. You know, for example, if you're a farmer doing core farming activities, if you sell food stuff, I'll caveat, you might want to change your mind once I get onto some case law, because it can be confusing what's zero-rated or not. But ultimately, if you've got a client that's in a regular repayment position, it definitely is worth a conversation. Or if you've got a client that's not in a repayment position, but their clients are all businesses as well that are assumed to be VAT registered and can recover their VAT, well, why not register? It means that you can recover the VAT on your costs, and when you charge your clients VAT, it's not a real cost for them. For example, if I went out as a sole trader VAT advisor and I raised an invoice plus VAT to someone that's a business, they'd claim the VAT back, so no major deal there, broadly speaking. The other thing that's an option with VAT registration is standalone versus VAT group. What's the right thing to do? Well, as ever, there's never a real right or wrong answer. But, you know, if you've got more than one business, it might be worth registering as a VAT group, especially if you've got, you know, charges going between the companies, or you're planning on moving a lot of assets from A to B or B to C. VAT grouping can be useful. It acts as a bit of a shelter where everything that happens between the VAT group members is essentially disregarded for VAT purposes, which gives people some comfort. It depends on the fact pattern, of course, but you should consider, you know, what comes with that. Well, if you've got, let's say, two VAT registered companies on a standalone basis, and you cancel the VAT numbers to create a VAT group, you're going to get a new VAT number. So there's a housekeeping attached to, well, what's the new VAT number going to be, etc., etc. But perhaps another point that's maybe more important these days anyway is the joint and several liability aspect of VAT grouping. It means that if someone's got a VAT debt and they go bust, the other members of the VAT group are responsible for that. Now, as an advisor, it's one that I'll mention to people, and where's the practical application? In practice, the one I'd be concerned about the most is if company A has a lot of funding from bank A and company B has a lot of funding from bank B. Typically, lenders, etc., investors might get a little bit funny about that joint and several liability if there's a risk that someone that they don't deal with at all might cause them a lot of issues. So it's worth just thinking about that joint and several liability point before advising someone or suggesting VAT grouping to someone. In terms of, you know, VAT registration application processes, I have to say that in my experience anyway, HMRC are getting better at processing applications. That's came at a cost, you know, or come at a cost. You can't phone up the VAT registration team directly at the moment. It means that, you know, the people that would normally answer the phones are actually focusing on processing the applications. So there is a cost to it, but that said, there is still HMRC's VAT helpline available. who you can speak to if required. And also, of course, I'd imagine your clients will speak to you about it. But as it stands, HMRC for standalone registrations are saying that it will take about 40 days for them to decide if your application is successful. And good news in my experience anyway, maybe I've had a lucky month, but I'm aware of some applications being turned around in a couple of days, which brings me back again to pre-COVID days where you apply on the Monday and the Wednesday morning, Thursday morning, you've got an email saying there's an update and you find that you've been given a VAT number. But it is still typically closer to a few weeks. So it's worth just keeping your clients updated on, broadly speaking, this could take around a month, but it might be quicker. It's all about expectations. I wouldn't be keen to tell someone expect it in a couple of days, but that is maybe just the cherry on top if you do get a quick application out there. And it's also worth bearing in mind that HMRC are typically processing the standalone applications quicker than the VAT group registration applications. But that's always been the case, and I'm sure you'll have seen that in your own experiences. If you apply for a VAT group, it typically just takes longer than it does if you're applying for a standalone VAT number. But just worth mentioning, if you've got a client that's asking you the question, well, what should I do? I've got options available. What's the practical bit to think about? The other piece that I wanted to quickly cover off was the option to tax. So just a reminder, this isn't actually fresh. It's not new law. It's not new guidance, but it's about a year old now, whereby there's been changes in how HMRC deal with options to tax. They will not send you a letter to confirm your option to tax has been put on the system. All you're going to get from HMRC is what I would call almost like out of office replies if you email in your notification. And that's what I would suggest you do, just so you've got some form of audit trail. Email your notification to HMRC's option to tax team. Remember to put the full postal address, including the postcode, and the effective date in the subject line. And that means that when HMRC automatically issue the email or emails to you, you've got a little basket of evidence there. You've got what you submitted, and 2 minutes later, you've got these emails from HMRC that confirm they've received it. That's all it's required from HMRC, or rather, it isn't really actually, if I'm being very literal about it. The legal test is about the notification to HMRC. So once you've done that, that's you got an option in place. But HMRC, I would imagine, would get in touch if there's any issues with an application, or rather a notification, I should say. I've not seen it in practice, but perhaps you have. If you've got any war stories, feel free to share them. But as I say, HMRC typically won't get in touch once you've emailed in and have sent the automatic emails. In terms of asking about whether there is an option to tax in place, it's unlikely you're going to hear from HMRC unless you have a case where you think it's over 6 years old for the effective date, or if you're an IP or an LPA, so involved in insolvency type procedures. Just assume that you're left on your own devices with this one when it comes to option to tax. And the final point I want to cover before I move on to a whirlwind tour of cases is international trade. Now, when it comes to international trade, again, this isn't specifically new, but what I'm seeing is fairly new. So let me just go through a few examples. So I am still a big supporter of postponed import VAT accounting. It means that you're essentially doing, a paper exercise similar to a reverse charge to account for your import VAT. And it means that you don't have to physically pay the cash to obtain your imported goods. Now, what I am seeing is quite a lot of businesses that will have a mixture of both. They'll use postponed VAT accounting for some imports, but they'll also pay VAT on others and then have to wait for their C79 to claim it back on their VAT return. And when I speak to people about it, there's various reasons. It's just what we've always done with that one, or they incorrectly assume that the postponed VAT accounting is only for EC imports. No, you can use it for all imports. So there is value in cutting out, paying the VAT and just doing the postponed VAT accounting instead. The other point I would suggest is keeping an eye on Incoterms and also various stakeholders, be it your customers, but also your colleagues if you're in a business. And for us as advisors, it's telling our contact at a business who might be the business owner or one of the directors or part of the finance team, just keep an eye on the whole picture. Because you might have agreed a strategy a couple of years ago when Brexit kicked off, but then you might find in practice, when you look at the detail for one reason or another, people have changed things about, or they went off in a different pattern. For example, logistics have said we can only get this deal over the line if we send it out right now, or sales might say something similar. And you might find you've inadvertently been doing delivered duty paid Incoterm stuff where you're delivering something to someone's door in Spain or the Netherlands or whatever it looks like. And in a way, inadvertently triggering VAT registration obligations in other countries. It's worth just checking in with people. You might have had to chat with them before, but if they're involved in moving goods out of the country, just check in and make sure that things are still going as you understood it to be. Because there are exposures, as I've mentioned, VAT registrations, or if you've passed over control to exports, for example, to their customer who has a UK business, for example, it might mean that you're no longer involved in international trade. You're actually involved in a domestic transaction that should have 20% VAT on top. So it's worth just kicking the tires if you've got clients or contacts out there involved in moving stuff around. Now, the next bit I'll do, and as I said, it will be a bit of a whirlwind whistle-stop tour of case law updates, but stuff that you might be seeing or hearing about, or I think it'd be useful to know or hear about, is poppadoms. And I wish I had some samples to show off, but I don't, unfortunately. But interesting quote from this case, calling snack food hula hoops does not mean that one could twirl that product around one's midriff. It's certainly an image, isn't it? And it's certainly one that I can't get out of my mind quickly. But I suppose what it ultimately comes down to is, in the case of Walker's poppadom sensations, Walkers were saying, well, we've got a product that should be zero rated. And by the way, HMRC's guidance says that poppadoms can be zero rated. What's the problem here? Well, HMRC's stance was, well, poppadoms, actually, when we talk about that in our guidance, we mean traditional poppadoms, like the kind you would have if you went into a restaurant, or even if you went into an aisle in a supermarket, where you're buying other things that aren't in amongst the snacks. The HMRC's view is, well, look, you've got a lot of potato product in here. It's really similar to crisps, what you've got here. And that's what it came down to. It doesn't matter what you call your product. What is it actually? Is it a packet of crisps or a container of crisps, or is it sufficiently similar to that product? And unfortunately for Walkers, they lost this case. It was decided that, yeah, HMRC are right. We think it is standard rated, what you've got here. Other one is casinos. There was a recent case, but it's been going through the courts for a long time. The Hippodrome Casino in London. If anyone's been down to London, you probably have passed it without realising it. It's at Leicester Square. It's a very dominant building there. And there's absolutely loads going on in there. You've got traditional casino activities that are exempt from VAT, but you've also got stuff around, bars, restaurants. There's a massive theatre there. It's a real, I suppose you'd call it in layman's terms, an international Vegas-style complex. What's going on? But you've got this exempt casino activity, the gambling bit. Everything else in its own right would be taxable. But what does the casino do to work out its VAT recovery on its own property? Because the property is used for a bit of everything. Well, the answer is they need to use partial exemption to work out their VAT recovery. But what they felt, the casino, was, well, do you know what? We think there's an override here where we can use a force-based proxy to work out our VAT recovery, so the bar here's fully taxable, the theatre here's taxable, etc., the restaurant over here. And HMRC disagreed. They said, no, we think there's a sufficient link, between everything that's going on here. Now, in previous court levels, the casino was successful, and it was viewed that the override could be applied on that floor space proxy. And the result of that for the casino was benefiting of over £500,000 a year of VAT recovery. However, the upper tier has sided with HMRC here. They've essentially said, well, look, there's a dual use of this property. What you're doing here isn't all about taxable in a standalone way or exempt in a standalone. In fact, we think that a lot of the taxable is only there because of the gambling, and there's enough linkage and stuff going on between both. And ultimately, the tribunal, the upper tier, agreed with HMRC on that count. But it's important for your clients that probably won't be as complex as Hippodrome. But just have a think about partial exemption. Are we getting a fair result or not using the standard income method? That's what you've got to think about with partial exemption. Hospital car parking, very straightforward case in principle, but very complex behind the scenes and in the courts. But essentially, it was a good news story recently for the Northumbria Trust, who had been arguing that their car park income should not be subject to VAT. And ultimately, the Court of Appeal have agreed with the Trust. At tribunal level, the tribunals have agreed with HMRC, but the Court of Appeal have said, no, we agree that you shouldn't have to account for that on your car park income. The reason being you're operating under a special legal regime that's got different rules to private parking operators. And also, you're not really distorting competition with people that aren't, part of the same legal regime, your commercial car parking equivalents. So that was a good news story for hospital car parks, essentially. And the final case that I'm going to look at, not poppadoms, but just a quick word on other food products. We're seeing loads of stuff out there, in this space around, let's call it bars. Is this bar zero rated or is it standard rated? Now, there's a bit of a theme where I'm seeing that the courts agree with HMRC that this stuff should be standard rated when they're looking at multiple tests, such as, what's the ingredients, how's it packaged, how's it sold, where's it placed in the shop. Long story short, ultimately, we're seeing loads of cases and we're seeing a few that are unsuccessful. And my tuppence worth would be, it wouldn't necessarily be a bad thing if there was an overhaul of the underpinning rules for zero rating food stuff. It might make things much more straightforward for clients and businesses out there that are making such products and selling these products. So that's my whistle-stop tour of the VAT stuff in the budget, stuff I'm seeing on the ground, and also just some case law that I thought would be interesting for you.
Great, thank you for joining us and for giving us such a comprehensive overhaul of everything that's been happening in the budget. It was really interesting to hear and give everyone who's been watching this webinar some food for thought about the changes they need to be discussing with their clients. I did try and buy a packet of Walker's Poppadoms as well, just to enjoy whilst listening to your presentation, but they've unfortunately sold out in 3 local shops. So perhaps the VAT case that you mentioned has led to an unexpected impact on demand. And maybe Tommy, the case study that you mentioned, he maybe needs to go on his 3-week holiday, pack his hula hoop with him and buy some Walker's Poppadoms at the airport just to enjoy. So at this point, I'd just like to bring up the answers to our poll questions. Thank you to everyone who has responded. It was just to try to get a flavour for whether what HMRC is telling us here at ICAS relates to what wasn't happening on the ground. So the first question that we had was to do with the speed of processing VAT registration applications. And this was something that our members were telling us there were quite a lot of delays in the past, and the new process that's been happening. It looks like we've got a bit of across the board response there, Tony. We've got 27% neither agree nor disagree, but some people are saying they strongly agree. Some people say they strongly disagree. Is that what you've seen? It very much just depends at the moment. It's not maybe quite as good as what HMRC would have hoped for.
I think that's a fair comment, Chris. Yeah, I mean, we've all got opinions on it, and some people have very strong opinions indeed. I have some people that support what HMRC have done, but in my experience, only I can only comment what I see and hear. And I think there's a lot of people that think much more could be done one way or the other.
I know that I was at a conference last week in London where the HMRC senior staff were making a big thing about things like the VAT helpline that was withdrawn, how, as you were mentioning in your presentation, there was a move towards putting people who would have been dealing with telephone calls onto the actual processing of the actual applications themselves. So maybe there's some work happened, but maybe more still to do. The second question that we had looked around the turnaround of VAT repayments. Now that seems to be a more positive message. We've got 25% slightly agree, still 32%, so just under a third neither agree nor disagree, but and quite a number of people obviously had clients that didn't have a repayment, so it wasn't applicable. And the third question was to do with the VAT registration threshold announcement that was made and that you talked about. And as I suspected, most people have said that's a slightly positive impact, and just under just change. Someone's just voted, so it's made it exactly a third now. Has said no impact at all. So that's kind of in line with what you were thinking in your section, Tony. So that's great. Thank you to everyone who took part in the Q&A pool there. Before we move on to our Q&A section, I just wanted to remind you of the role that the ICAS tax team can play to support you when navigating the VAT system. Now, we're represented on the Joint VAT Consultative Committee, and the feedback that we receive from our members is really helpful, and it's really important to us in terms of identifying what issues to raise with HMRC. We often raise issues with HMRC so they can be looked at via specialist teams. So please do get in touch. The email address is there, tax@icas.com, to let us know your comments and your feedback. So thank you, everyone. We'll now move on to the live Q&A section. I've just noticed, Tony, while you were speaking, quite a few people have submitted questions either on the Q&A or in the chat. So we'll try and get through as many of those as we can. The first question is to do with the announcement in the budget to do with the furnished holiday lettings status change for income tax and capital gains tax. And we've actually had a few people asking this question before the webinar as to whether or not that alters the requirement that's currently in place for an FHL business to register for VAT and charge VAT to those who are staying in whether it's the Airbnb type setup or whatever. What's your thoughts on those, Tony?
Yeah. I had a conversation with someone a couple of days ago about this very point, and my initial gut instinct is I don't think it changes the VAT rules. I think you've just got to look at the VAT rules and see, well, is the nature of my supply still covered by the rules? It would mean that I have to treat this as a standard rated VATable supply. And that would be the case if you're operating your typical hotel style Airbnb arrangement. The VAT treatment's different. If I'm renting a house to someone for let's just say a 1-year tenancy agreement, and that's a VAT exempt supply. However, if I'm renting out a flat I own to someone for 3 days that I've put on Airbnb and booking.com or whatever it looks like, that would be taxable for VAT purposes at the standard rate. Now, that might beg the question, well, aren't we trying to get rid of the inequality, with this budget measure, but now we've found a new one whereby the VAT treatment is different? Well, potentially, yeah. But as far as I can see, you would still expect such activities to be VATable for VAT purposes at the standard rate. I don't think it's going to be exempt, or at least unless something changes significantly, it's not going to be exempt like a private rental would.
Yeah, I mean, we might see something in the finance bill when it comes through. That's certainly what my understanding is that there's not been any change to the VAT position, and indeed the inheritance tax position for furnished holiday lets is somewhat different as well. So it doesn't necessarily mean that what's right for one tax will necessarily follow for another. The next question that we've had through is if a business breaches the VAT registration threshold, but chooses to reduce the price so that the net turnover falls below the deregistration threshold, what would the process be in terms of what that business need to do for registration, etc., for VAT?
Well, that is very transactional, whatever level you're looking at. So, matter of fact, have you breached the threshold? Yes, you need to be VAT registered, or at least notify HMRC you've got to be VAT registered. Worth pointing out, if you think it's a short-term blip, you can ask for an exception to registration. I understand that's still available to people. But if you do end up VAT registered, but you think, you know what, my trade is going to decrease, you can apply to deregister if you've got grounds to think, well, do you know what? I think in the next 12 months, my trade is going to be below £88,000. You can apply to deregister. There are cases where people will escape the VAT club completely if it is a one-off blip, for example. If they can convince HMRC, look, this was a one-off contract. But there are many people that will register because they have to, but they quickly come out quickly thereafter. So I would say just keep an eye on it for your client. Keep an eye on how it's looking in terms of what are the forecasts, etc. And communicate with HMRC clearly about what you see it being, and it will all take its natural form from there.
Tony, when you were talking about the VAT registration threshold, someone's posted a question about looked at whether it should be higher or lower and all the rest of it. And they've said it's their understanding that the threshold can't increase anymore due to the EU and Northern Ireland's continued link. Is that something a fair comment?
That's definitely a fair comment for now. Yeah, now who knows where things will be in a year's time, 5 years' time, etc. But for now, there is this piece enshrined where it's essentially €100,000 figure. There has been some people that have said, well, is 90 grand above €100,000? I'm not going to get into that granular level of detail, but the point is they probably are maxing it out as much as they feel they can just now. That's maybe what Treasury and government haven't spelled out, that this is as far as we can go. But in principle, it could well be we see it, that issue goes to the side and we end up with a massive threshold, or indeed, it might be unpopular at the time, but we could see it down to nil or very low indeed.
Another comment in the chat, but I don't think it's necessarily one that's within your power, Tony, but interesting to see what you think about. How about only charging VAT to unregistered customers and miss out the input and output industry?
Well, it's an interesting one. I've thought that since day one of VAT. Why are we having to charge that to then reclaim it, etc.? And you know what? We're all a little bit flippant and jokey about things. But you know what? Who knows what the next generation will be dealing with? Right now, we've spent a long time in the UK trying to get MTD off the ground. And we're there with the digital links and all that just now. We're not as far as in advanced as other countries are with digital applications. I always use the example of Spain, where it's almost like a live interaction and there's a lot of requirements out there. But ultimately, why not? If you can have some form of assured system where, well, here's my VAT number, here's my VAT number, we get HMRC interface to confirm we're all good. Why charge that at all? Who knows?
Yeah, if you were the Chancellor, Tony, that would be the first thing you would do.
After the more zero rating for cakes, perhaps.
Sticking with the VAT registration threshold, just to understand the impact of the increase in the threshold, we've got a question about from 1st of April. Can we look 12 months and apply £90,000 to that income in terms of the VAT registration threshold? Or how does it work when the threshold changes in the 1st of April?
Yeah, I mean, the way I look at it, and I'm maybe giving away my secrets, not trade secrets, but I typically have a very straightforward Excel spreadsheet when I'm monitoring someone's taxable turnover. And I think it's just replacing from, the end of that month, the 85 with a 90. It's as straightforward that in my view. Maybe I've been too crude about it, but it'll be 85 this month as well, up until the end of March. Have I exceeded 85,000 for VAT registration? If the answer is yes, then you've triggered it. You've got a month to tell HMRC and you'll be registered from the 1st of May, all being equal. But then next month, when you're looking at your tracker, you're simply going to update the 85 up to 90. So that might be useful. There, as HMRC and Treasury have said, there's 28,000 winners out of this, they feel. Maybe that is the answer, that people are getting close and they've got that extra £5 to play with.
Thanks for that, Tony. We've got a question to do with the different countries, and the questioner has asked, it may be one that we might need to come back to afterwards, but they're asking about what's the best resource to find registration and reporting thresholds by country for EU VAT based on retail goods being shipped from the UK to various mainland European countries and the Republic of Ireland.
Yeah, well, what a question. There's so many ways you could attack this one, Chris. It's like an exam question, but there is things like a one-stop shop available for people where they can register for VAT somewhere and they're basically running it out of that country. In my practical experience, these people that proactively think about this typically go for countries like Ireland and the Netherlands, where generally good understanding of the same language, English, and that's you setting up base somewhere. There's a good reputable country, and that's you joining the VAT club there. There's other people, the other side of the coin, to be blunt, that don't care, so they're happy to export stuff to wherever, but they're happy to leave the client to pick up the tab. And we've probably all experienced this in our lifetime, where we get that card through the door from Parcel Force saying, please pay at this link or go to your local warehouse and pay, and we'll hand over the painting that you bought from the States or whatever it is. It's just that with Brexit, that applies in Europe now, and we send stuff over there if we take no action ourselves to be VAT registered in some format. So again, apologies, a bit of a Teflon answer this, but it really depends on your own circumstance and how you want to take it on. So it is maybe one to follow up on, I suspect.
That's great. Thanks for that, Tony. Now we've got an interesting question here. I'll try and summarise it. It looks like it's to do with a client-specific example, but I'll try and summarise it in general terms because I think it raises quite an important point where you've got a succession of a family business. So you see in this particular example, it's a mother and her two daughters, and the mother's the sole trader, and she's retiring, and the two daughters are taking over the business. There's an agreement to transfer the business over, but they don't want to take on the VAT number because it's not got a great history. Say the mother's had a few late returns, etc. So we'll start afresh with that. So the question's all to do with whether or not the next generation, so the two daughters who are in partnership, would have to register for VAT straight away if their mother was trading at a level of above the threshold, or whether they would be viewed separately because they may, until such times as they reach the threshold themselves.
Yeah, no, that's a great question. It's one that will come up in practice in different guises, and ultimately when I hear that type of situation, I start thinking right away about, well, are we talking about a sale of assets, essentially, stock and assets? If we're being very cold and crude about it, I'm just selling you this and nothing more. That would take its normal VAT liability. So it would, so if something was VATable, you'd expect 20% on top. Then you start thinking about TOGCs, transfers of going concerns. And, if it's going from one, let's say a sole trader to a partnership, are you ticking the box to have a TOGC? And you'd need to possibly be VAT registered if it was the transfer of the business. And what I mean is need to be VAT registered, as you might find that if there was £100,000 turnover, if you're buying in that whole business rather than just the assets, then you would have an obligation to be VAT registered. And you might want to, just really kick the tires and that sort of thing, because the last thing anyone would want is an assumption that something's VAT free, as a TOGC, for example. And then you find out, oh, wait a minute, HMRC have came and they've assessed me for X thousands of pounds on stuff that I sold on to my two daughters acting as a partnership. So there's a lot to think about there, actually, with that type of situation for succession planning. But yeah, you've either got a stone cold, this is a VAT and assets, at 20%, or it might be a TOGC. And if it wasn't a sole trader, if it was a company, for example, and someone's simply buying the shares, then it's business as usual. There's nothing to see here, is my final comment on that one at a high level.
Thank you very much for that, Tony. We've got a few more questions, but we've almost run out of time. So I think probably the best thing would be if we could ask you to answer some of them, and then we can post the answers to the remaining questions online, just so that anyone who's watching the webinar, just so everyone gets a chance to have their questions answered. It has been a very popular webinar. I'm not sure if it's your after the webinar you did last year that you're very popular, if it's all the talk about Jaffa cakes and poppadoms. We'll leave that for others to decide. So thank you, Tony, for the question. There's quite a broad range of subjects there, so I certainly you got quite a good grilling from me on that one. So but sadly we're out of time. So before we go, please remember that you can keep up to date with all the latest tax and other professional news, including the latest information, guides and resources on ICAS.com. You can access technical support through the ICAS Technical Help Desk, available through the Contact Us section of our website, which covers audit and accounting, tax, practice and support, AML and ethics. It would be great if you could leave us a rating for today's webinar. There'll be 3 short questions appearing in the poll on your screens now, in the chat box at the top of your screen. We would really appreciate your feedback, so please take a few moments to respond to those questions before logging off. Looking forward to our future events. We'll be running 2 spring tax updates in the next few weeks. The first will be on Thursday, the 28th of March, when my colleague Justine Riccobney and myself will be looking at the latest developments on the owner-managed business and employment taxes front. Our colleague Susan Cattell will then follow with part 2 on Thursday, 18th of April. We're also organising the in-person ICAS Sustainability Summit in association with Accounting for Sustainability, and that's going to be in Edinburgh on Thursday, the 25th of April. Links to all our events are available on icas.com/events. And it only leaves me to thank Tony once again for his excellent insight into all things VAT, and of course you, the audience, for joining us this afternoon. I do hope the webinar has been helpful to you, and until next time, goodbye.